everybody, it's me, Max Farrell from DexFXMarkets.com. In this Dex Atomic series, we're going to talk about the structure called dynamic structure. Now, structure for the pairs are the support and resistance, the main structure. But there's sometimes certain values in a screen. So here's what I'm going to tell you. Audi JPY, Audi USD, all these pairs that are here, every time that you flick on this site and you're on a computer, your screen might be a little bit different size on a pad or what have you. But what we're looking for is about, here's from the 26th of, today's the 25th, of course, but the timing's a little bit different, right? So the 25th to the 24th. So about a full day's worth of bars here, or candlesticks, if you will, okay? And in that case, this is what you're kind of looking at. You're not trying to go back too far in the history here. You're only trying to be within a few bars of information, right? Because you're not really looking for too much information. Okay, there's three main processes of dynamic structure, and we refer to some of this as trend, and whether it's an uptrend, it's descending or ascending, and channeling, right? Or going sideways, as some may say. All right. So, but every time that we do this, we're looking at several different parts of the structure. So let me take this into, I'm just going to get a trend line here, and I'm going to show you. I'm going to draw some lines on the chart and make them a little thick so you can see them better. Okay. And I'm going to, let me try to get them right there. And go here, okay? These are two dynamic structures that are happening at the moment, okay? The first one here that we're going to look at between the two lines, this is the channel that happens with this pair, okay, or happens at this particular time. So the market moved way down into this channel and started to really bounce around, right? And as it did, it then, as you can kind of tell, it did it a few times. Look at all these wicks that touch that line. And then up here, you can see all the wicks that touch this line. 1, 2, 3, 4, and then you got a couple that tried, but it never really broke it. Just kind of vibrated in there for a minute. This means that the bear and the bulls were battling back and forth on who was going to win. And they were putting just as much effort into buying as they were to selling. Now, once they did slowly break down, this structure became a point of it bouncing off of that at that point. And as we can kind of see, if we extend these out, that the market is still kind of playing with that just a little bit. Okay. Now, once this broke through, is it going to come back up and play around in this zone again? This is what we're trying to spot. Okay. Now, this particular channel is only one part of dynamic structure. Finding other parts of dynamic structure is just the knowledge of, say, in a trend. Now, a trend flowing downwards will always have lower highs. Okay. Because what we're looking for are things like this, little tiny peaks. Little tiny runs of the same color that get up, and then it has a little bit of pullback, right? Then you get some same color and a little bit of pullback. Same color and then a little bit of pullback. Okay? Same color, little pullback, same color. And these peaks that we start to look at, okay, if we connect all the opens or all the closes together, okay, you'll get this like this little peak and valley kind of mentality, right? So as we look, we're just trying to connect as many peaks to a particular level over to the right. We're always looking left of the arrow. So when the arrow comes out, we're looking left, right? They said, go west, my son. But this is like, go left, my son. All right, so you're just looking left to see where are these peaks and valleys that contribute to your process. Now, the more that they do, the more times that a particular peak or valley or a price has gotten to a point which coincides with your area, the better it is. Just like you got the green and red and thicker lines, you're looking for something closer. So if I were to take this particular trade, what structure would I use? I would come back to the red line, of course. But if I only had, say, one or two, if I was looking left from here, I would only really have this line right here to be able to use. But I can't look right? When we backtest, I'll teach you how to backtest in a moment. But let me see if I can find another pair that'll have something of the moment. Okay, so here we go. I can use the structure to the left here, right here, because it's above this green line. I could use that here or even the top of it where it reached at one time with its wick, and it sort of coincides with this information over here. So if I have 1, 2 kind of areas, I can try to scroll back to find more, and I might, but again, here it is all the way over here. All right, about a day and a half, almost 2 days ago. So this level could be validated at that point. Now, if I came in and I was trying to validate something down here, this might be just a little bit too close. We want it to be between 2 to 5 pips away from wherever the price's action is happening right now, because it's going to validate that a little bit. If it's too close, it may not have enough information to be a true validation of being dynamic structure. Okay, so the point is trying to find, this is an artistic value of looking back. You're trying to find more reasons why to be in the trade, right? But try to make sure that you have enough reasons to be in the trade. And 1 or 2 is just not it. Maybe one or 2 might be just enough for you. But in my case, I try to find 3 or more touches to my line when I'm looking at that process, or have superstructure. If superstructure or dynamic structure meets up with your MA at the time and it looks really good, then you could go ahead and do that. But in this case, if we're doing an all-in kind of mentality or a moving average above or below the over-under strategy, I wouldn't be in this trade. But if I'm doing an all-in, I wouldn't use, it's too close for the green there. I would come back up to this structure in here, validate it there, validate it over to here, and call that a higher medium risk trade, I would say at that point. 83.73 down to 61. So yeah, that would be, let's say, a medium to low risk trade. All right. I hope that you experiment as much as you possibly can. I can talk for days about dynamic structure and show you thousands and thousands and thousands of examples as you go. But just start taking your line tool. Even your cursor can be used. You can see I'm there, that's good. Oh, I got the tops here. Look for those coincidences. Look for those peaks and valleys that touch each other and see if they correspond with your area. Don't go back too far and just have some fun with it, right? Because you got nothing to lose. You could trade them in demo. You could practice, right? So begin training with the different levels that are in there. When is pushing it too close, too much? When is being too far away to get picked up? Those things that you're going to learn on your own while you trade. Now, while you're training as well, just keep in mind, you're just trying to find a reason why to be in the trade. This would be your best level. And if you get over to Nadex and there's not a price on there for you, we'll teach you how to do that here. Hunt out those prices and when to creep in and when not. Then wait for another trade. Don't worry. There's plenty to come. I'm Max Farrow. This is DexFXMarkets.com. I look forward to seeing you inside as always, and trade well.